All right, let's start our discussion this morning in the market. Like we said, we try and look at how your money has been faring in the market during these politically turbulent times. And joining me in studio is Laban Cliff Onserio, my business expert, is with me. Laban, explain to me something. Front page of the Business Daily, property registration blots ease of business ranking. So Kenya attractiveness to investors has improved 12 places. That's according to the World Bank. At the same time, just last week, we saw that the traders are losing about 700 billion shillings. How do these two relate?
Well, Trevor, interesting times indeed, especially coming in from a political season. Well, I should say, first of all, good morning.
Good morning, love.
In the markets today, we're just kind of focusing on kind of changing tune to what we're used to, especially in the previous days. You know that the business community has been calling on the government to kind of ease in the political noise because, of course, it has been detrimental to business. Well, a lot more to look forward to. Well, Caps mentioned that they've lost, all the economy has actually lost 700 billion shillings. That was contested yesterday. We had, of course, the Caps CEO and a bit of other economists. So, and that recent ranking of Kenya on the World Bank, of course, space, kind of just puts in another element of, okay, so what next for Kenya? So yes, there's this whole political dark cloud hanging in underneath, but at the same time, there's a lot of prospects to look forward to.
Yeah, what about the tourism industry? Because I was with Professor Noah Midamba yesterday, and he said he was at the airport and it was virtually almost empty. Is that the same reflection on the ground?
You know, that's quite an interesting question because look at it. We are on the last quarter of the year, especially as we're heading towards, of course, the December holidays. And, you know, most tourists, especially those coming in from abroad, would like to really plan their holidays right on time. So have we lost revenue, especially coming in towards kind of the last quarter of the year? That is something, of course, to be debated upon because, again, there's this still push about domestic tourism where you do not quite depend on source markets, but look towards local tourism. But indeed, speaking about that, you know, we actually even have loyal tourists. We have a German tourist, especially in Mombasa, actually in Watamu, who said, you know, despite Kenyans, of course, going into the polls, I'll still be able to come back and enjoy, of course, the coastal offering at the coast.
So in a nutshell, Laban, for the Mama Mboga out there, are we okay or are we not?
That's, of course, something I would not want to speak to as a journalist. Well, I'm not the expert. Today, of course, I have economists, I have business practitioners, and, of course, honored to also have the Principal Secretary from the Ministry of Infrastructure. Because remember, Trevor, yesterday also we had the Kenya Railways actually just launching in an additional train, especially that was going to be the inter-county train that will actually stop at different places. Remember, I mean, initially you had a direct kind of train from Nairobi to Mombasa, would took you about 4.5 hours. Now you're going to have stops to Emali, at the river, and that, of course, you're just going to spend an additional hour. But, of course, infrastructure, as they say, is an enabler to business. So, of course, we have the PS to talk about that. But from your side, maybe you can tell us from the political side, how do you see temperatures going?
Well, that's a tricky question. Now you're putting me on the spot in reverse. Here's the thing. There's so many analysts who say different things. When some people say it's going to be stable from this point henceforth, of course, that's on the Jubilee narrative. The NASA side says that they're still going to engage in civil disobedience, and therefore this might drag on for a while. I guess it's one of those things that all journalists will give you a cliche. It's a wait-and-see game.
Indeed, wait and see game, but don't worry. Today we have the expert indeed right here in the studio, Irungu Nyakera, I should mention again, Principal Secretary in charge of planning and statistics. So we're kind of going to go into the numbers and just get to the details. Trevor, thank you very much. Good morning, and again, welcome to In the Markets. My name is Laban Cliff Onserio. So today we're just kind of shifting gears and just looking at matters to do with business and just looking at where do we head from here as a country. A lot more especially to expect and just to look forward to in different arenas, starting in from tourism, starting in from infrastructure, just looking at the whole investment climate, especially with the release of the World Bank Ease of Doing Business report. So really quickly, I'm going to introduce my panel. Right from my far left, we have Nderitu Mwangi, who's the CEO of Redberry Limited, which is, of course, is a local digital investment group. And, of course, he represents the whole group, which, of course, represents different practitioners right here at the Central Business District. Next to Nderitu Mwangi is, of course, my good friend. We have Irungu Nyakera. I should mention now, Principal Secretary Planning and Statistics. Of course, just to give us an overview from the government and to really what we expect, especially at this time as we shift gears. We should be expecting a colleague of ours again coming in from the Nairobi Securities Exchange just to get what does this really mean at the NSE. A lot of numbers have been put out there. How's the stock market faring on? We're expecting Rufus Mwanyasi to join us. But of course, before Rufus comes in, I have next to me is Kent Lisibo. Kent is from the Kenya National Chamber of Commerce and Industry. He's in charge of economic development. So a lot of focus, especially on the private sector, and particularly on the lobby groups into what exactly they're doing even as we make a move into business. So, gentlemen, thank you so much for being here, braving the cold, and being here on time. Appreciate it. Let's start from Nderitu, Mwangi. Nderitu, from your side, you've been in the media of late, a lot more reactions, especially looking at politics and business, talking about, you know, different areas to be set out for, you know, politicking, I should say, in terms of just making sure that the business is not hard. From your side, how has this few months to the presidential election and re-election been?
I think the few months have really been bad for business, because, as you know, business is very sensitive. And business was okay until, pretty much okay until the 8th of August, until when the election was annulled. That is when really things went bad. Yeah. But we are hoping that with the conclusion of this election, now things are going to be better.
What are some of your kind of your pain points that you had, especially during the elections? I mean, you spoke about riots. I don't know what else now internally, especially among the business community, you experienced.
No, you see, when there are riots and everybody starts to, every business starts to react to the violence that was there. Everybody holds what they have, and if money is not circulating in the economy, then there is no business. Yeah. So that is what really caused that, yeah.
Irungu, what is the what is going on, especially among the business, the political class, especially? I know even during the political season, there was kind of even planning that was ongoing, or shall I say, you know, projects and looking at towards your targets and what have you. Just talk to us, especially during that period of the elections. What was going through in your office, and what were you going towards?
Okay. I think broadly, as you know, of course, the government doesn't stop in terms of working and planning even during this political season. So from our end and the Ministry of Devolution and Planning and my docket, which is planning, we've been monitoring the economy, the growth, the areas, the pain points within the economy. And of course, as Nderitu was mentioned, up to and until 8th of August, I think the businesses were certain. They felt clearly certain on the direction the country is going, the direction the electioneering is going. And that's why you're seeing that there wasn't as much, there wasn't that much uncertainty. Following that is when we saw the uncertainty. And what that did is influence the investor confidence, influence people taking loans, influence people hiring more people, influence foreign investors coming into the country, or even transactions closing. From our end, we've been undertaking the tail end of the second medium-term plan, which ends in December of this year. So we've been looking at what has been, there's been a significant slowdown on progress on various key initiatives, both from the government as well as the private sector side. But I think also is the fact that we are still continuing with the planning for it. We feel that the economy slowed down, but still can recover. The second quarter, the GDP growth was 5% compared to 6.3% last year. So we feel that if we can get to an end of this electioneering and politicking and getting back on the path of the development and economic progress that we've seen, then we can salvage the situation. But otherwise, there's been significant slowdown on the economic performance.
Irungu, quick question is on the Vision 2030. And I know I just want to put it out to you. What is the estimated, especially economic growth, for us to achieve Vision 2030? should be about on a double-digit figure. Would that say, if now you're talking about 5% and you're talking about 10%, in best estimate, are we then retrogressing onto that plan, as you mentioned?
Yeah. Within the Vision 2030, the anticipated growth, GDP growth, is actually 10%, even within this second medium-term plan. But that's we've not achieved that. Actually, the highest was within this plan was in the range of 6%. And but even within the next medium-term plan, which starts in January next year until 2022, the growth that we're projecting still is going to be 10%. We've not been able to achieve it, but at the same time, as you know, GDP-wise, we've grown from about 40 billion to 71 billion over that last 4 years. So, and also we've moved to a middle income status country. So I think it's still achievable, but there's a lot of structural transformations that we need to see within the economy and within our key sectors for us to actually achieve the Vision 2030.
All right, gentlemen, of course, we've given you, of course, your copy of the Biz Daily, but we're going to tell our viewers what to expect just now. Kent, you sit here, of course, representing Kenya National Chamber of Commerce and Industry. What's your estimate on the revenue loss, especially also lost opportunity coming in from the Chamber of Commerce? If we could just not only give a figure, but also just give kind of a context area into how businesses have suffered in this period.
Yes, thank you and good morning. The key thing for us to observe is statistics don't lie. And unfortunately, a lot of what we rely on is political rhetoric and not concrete statistics. And that's why you have all this dispute about whether we've lost 700 billion or whether it is less. So I think as a National Chamber of Commerce, what we are putting in place is a system for capturing data across the 47 counties. That kind of empirical information is very important for national planning, and where the PS Irungu sits, they need very accurate information to see what is the impact of certain political action. Having said that, if we look at the fundamental of the country in terms of even our own growth rate, projected growth rates, all the fundamentals, despite the slowdown in the economy, they haven't changed significantly. Our GDP growth rate is still projected at around 5, which is respectable by any standards even across Africa. Whether you look at our current account balance in the country, all the fundamentals have not significantly shifted. Inflation rate is estimated at about 6%. Our external debt, perhaps that's where we need to look at, because the government, in absence of revenue, domestic revenue, the government is forced to borrow significantly. Fortunately, a lot of this goes into infrastructure and long-term yielding investments. But in the short term, if I say, yes, business has slowed down, and a lot of it is because of fear. The general public is apprehensive. There is an uncertainty. They don't know how long the draw will be, the political stalemate will be. So I think the sooner we resolve these things, the better it is. People are not spending, and if the public is not spending, all major sectors are infected. And furthermore, something very significant is that the strain of the drought on the economy was significant, and that, of course, has affected food prices. And with that, obviously, you feel the pinch of inflationary tendencies on the general public. So I think I can say that the situation, as much as it has been projected, it can be salvaged because all the fundamentals at macroeconomic level are still in place.
Of course, I notice you've stayed away from the Securities Exchange, but we're going to come to that, especially after the break. But let me throw it back to Nderitu, because from where you sit, is there, what is, if I could just take a kind of a dipstick and to just, what is the sentiment, especially after the election? What are some of, are you now going back into your planning? What next are you really thinking about, especially as a business community on the ground?
I think even as I've been urging people, is to go back to work because now we have a president who's been elected and in office. Maybe he's going to be sworn in any time. The only way for businessmen and businesses is to go back to work. Yeah.
All right, and of course, going back to work it's easier said than done, because on the ground there's still jitters. I actually be told of you know, employees, or shall I say investors, who choose to go to other countries and just kind of watch and observe from outside the borders, and especially everyone perhaps is watching right now, and they're just wondering, is it really safe? Is it really time, especially with what might come of it, especially after the elections?
We would, you know, Kenya is a very resilient economy. And we would urge investors now to come back and start investing in Kenya, because we have to believe, as the locals, we have to believe in our economy first before foreigners believe in it. Mm-hmm. And we are urging them to come back. We know this country is going back to normalcy very soon. All right. Yes.
Irungu, why are you actually seated a very, let's say, like a very epic position, is because of your role currently in government as a principal secretary in charge of planning and statistics, but at the same time of your previous background as an investment banker, just looking towards the private sector. It's going to be very difficult answering this, because I'd want you to kind of wear both hats into, if you're sitting as an investment banker and you're advising and you're looking at where the money is going, what are some of the sentiments that, you know, the investors will look out for, especially into what next, especially after a political season?
I think as an investor, and that's really what you see, a lot of them are taking a wait and see approach, and in particular because you know, the international media has been also talking about looking at putting quite a bit of focus on the Kenyan election. And the reason that international investors have been coming to Kenya, one is of course the fact that we have a large economy, meaning that they can be able to invest quite a chunk. I think in terms of, if you look at even the ease of business, Kenya is third in Africa after just Mauritius and Rwanda. If you look at our manpower in Kenya is quite strong. So for investors, they know that Kenya is a country that they should invest in. But at the same time, it's a question of when's the right time. And currently, with the current mood, a lot of investors are opting to hold. And you can see that from the banks. The banks are reporting a significant credit in terms of very minimal credit growth. And both from the SMEs, but also from businesses. Businesses are opting not to take such big decisions as borrowing. But what we expect, and what we've seen even prior in terms of just looking at the post-election is more the business. As soon as there is that normalcy that comes up, as soon as the confidence that certainty has come back to the market, then you'll see that investors will start trickling in. Turns out that this will be towards the November, December time of the year. So really we expect that more towards the beginning of the year is when we'll see major shifts.
So you look at about 4 weeks, 8 weeks, so your guesstimate is maybe perhaps January. That is, of course, in a very pivotal conditions. If perhaps maybe the opposition doesn't choose to go to court and the re-election is not challenged.
Exactly. Yeah. That's what I'm talking about, the certainty. Mm-hmm. So with the certainty will only come after the swearing in, and that's the expectation.
Mm-hmm. So now, knowing that from an investment side of view, I think in government, what's the challenge to you, especially even as we plan ahead?
I think from the government side, and that's I guess what the president said last time, is the respect for law, and so for us we are looking at it that the swearing in will happen, but at the same time we expect that the different parties involved before that happens. So from our end, we also wait and see to see what comes of it. The best case is, as you said, within the next few weeks we get the swearing in of our president, and then the country gets to move on. If that does not happen for one reason or another, then we go back to the drawing boards and look at what that means for the country, for the economy, and the Mwananchi.
All right. Yeah. Kent, from your side, and of course listening to the Mwananchi, I know as a chamber you're represented right to the core, just what to go out for. Just really quickly, when should we expect that statistics? Just looking towards, like, what has been the losses and charting the way forward, especially from the counties.
Yeah, we would predict about within the next 4 weeks, as the PS has stated. Within the next 4 weeks, we'll have interim statistics, which will be indicating the effect from August. But within the next 8 weeks, we will have the overall statistics to see how the counties have fared. And there's also this transition in the counties, and they haven't received fully their devolved funds. So that also has an effect on what we are looking at in terms of expenditure and growth. However, I think the key thing I would like to state is that after 2 presidential runoffs, the general feeling across the country is mentally Kenyans have moved on. They have accepted that there is a government in place, there's a president in place. So what they need is an assurance that they can do their business safely. So I think security is the major concern of Kenyans, more than when they're swearing in and how long it will take. Kenyans are back to work. If you see, slowly, gradually, they're coming in.
All right.
So, yeah.
Kent, I'm going to come back to you after the break, but you're watching In the Market, and today, of course, we're shifting gears, just looking towards the impact of politics on business. Of course, businesses charting the way forward. I have an expert panel in studio, so don't go too far. We'll be coming right back up with a lot more discussion, especially on tourism, infrastructure, and the ease of doing business report by the World Bank. Stay tuned. All right, good morning. This is In the Market. My name is Laban Cliff Onserio, and today we're shifting gears away from the political noise, just looking towards what are the business prospects going forward. I can't really give you an estimate on how the economy will grow. I can't really give you an estimate on how different sectors will do, but I have an expert panel in studio introducing them. Right from my far left, we have Nderitu Mwangi. Nderitu Mwangi is the CEO of Redberry Group and also representing a host of other business leaders right here at the Central Business District. Tom, the Hood Group. Next to him, we have Irungu Nyakera. Irungu Nyakera is the Principal Secretary in charge of Planning and Statistics. So yes, about the economic growth, about the Vision 2030, he's the one who will give it to you. Next, joining us right now is Rufus Mwanyasi, who's the Managing Director of Canaan Capital. Of course, a lot has been said about investments on the Nairobi Securities Exchange and what exactly are investors especially going towards. And of course, we have Mwanyasi to give us those details. And next to me, we have Kent Lisibo. Kent is in charge of economic development right at the Kenya National Chamber of Commerce and Industries. Well, you're watching In the Market, and just to give you an overview on what to expect on your copy of the Business Daily, which will actually kind of give context into what we'll be discussing. Take a look at that front page, just looking towards property registration, just bloating the ease of doing business ranking. Of course, Kenya moved 12 places up. We're also looking towards foreign investors making a comeback on the Nairobi Securities Exchange. And we have Rufus Mwanyasi to just give us an overview, the details, what are the sentiments, especially around the business community after the presidential re-election, only on your copy of the Business Daily, and a lot more, especially on Kenjan's new CEO, of course, that's Madam Rebecca Miano, who's been confirmed. A lot more on the National Hospital Insurance Fund and the outpatient limit, only on your copy of the Business Daily. So let's get straight to it. Foreign investors make comeback to Securities Exchange. Rufus, what sentiments does this bring to your side?
I think that's it's a vote of confidence the market, but also just from an investor perspective, looking at it from a valuation point of view, I think the markets are that cheap, and I think maybe that's the standpoint that the international investors are seeing. So I mean, looking at it from even from the long-term trend, the market's actually, the yields actually vary. Like for example, for the stocks, it's at 4% compared to a 10-year average of about 3%. So that tells you that the markets have really gone very low in terms of prices. And the second point to it is, there's that, people taking advantage of the fact that there's, the most of the local participation is not really there, so it's an open field for the foreign investors to bargain some of the high quality stocks at very attractive prices. So that's the narrative and the theme that is playing out, especially in view of the foreign investors.
Let's look at especially the term that has been used is that there is a bloodbath, or there was a bloodbath at the Securities Exchange. I want to get from your view, is that true? And this whole aspect about that investment around the stock market is just purely, I should just say, kind of feelings like, in terms of, well, do I really want to invest in Kenya at this point, or do I not want to invest in Kenya at this point?
Well, talking of a bloodbath, I think that ended sometime in February because as we speak, I mean, the following months since February, the market has gone up almost 25%. Of course, it is pressed down a little bit. So the confidence has come back, though not fully as we expect. So the bloodbath, that happened, I think, in the last 24 months ending in February this year. So the confidence is coming back. I think just looking at the conditions right now, I think they are favorable for for buyers to start coming in, and I think save for the situation, the political scenario and things happening, I think there's a lot of upside for the stock market. So I think good times are back, and I think we expect to see more and more of prices stressing upwards.
Right. I want to just jump in really quickly, because from your view, you mentioned just a bit about the bank before we went into the break, how the banks are perceiving, kind of the interest rate capping law, and from your view, just giving us a global perspective, is that, are the bank stocks the way to go, especially at this time?
Not true. Of course, you've seen the growth, the actually even negative growth in terms of profitability for the banks. I think equity was the last one to report, and a lot of it is being attributed, one, to just economic fundamentals, which have slowed down, and I mentioned about the credit growth and the loan, of course the credit growth, as well as the bad debts on the back of the IFRS 9. But on the capping as well, because capping then means that they have to be very sensitive to the client, because prior the rate that you charge is also based on your risk profile. So for the SMEs, as well as individuals who are perceived to be a lot riskier than the banks, are not really lending to those that much, and with the lower margins. So I think the cap has made the bank stocks see kind of be hit significantly. We've seen indications from different quarters, including, I believe, the IMF just about 2 weeks ago, that globally the caps haven't worked. We've seen the central bank say the same. We've seen the banking groups talk about the same. So it's really we'll see within the coming days what that means, whether that's something that will be relooked at, or whether then banks need to change their business model to factor in the fact that the capping is there to stay.
All right. Yeah. Not telling us whether or not to buy or not, but of course that's a decision that will be up to our viewers on looking at what stocks to look forward to. But speaking of the government, well, it does not know how much has been lost in the extended electioneering period, and cannot therefore confirm if the Kenya Private Sector Alliance's figure, that is over 700 billion shillings, is legitimate. Now, that's according to Industry, Trade and Cooperatives Cabinet Secretary, that's Aidan Mohammed, who, however, acknowledges that there has been a 1% drop that's in projected economic growth. That's despite the challenging year that was witnessed in 2016, while Kenya improved its World Bank ranking of the ease of doing business. But Kenyans may have to wait for a while. That's before they can enjoy the benefits of the good performing aspects of the economy. Take a listen.
The political music and performance has been more of noise to the country's economic performance, more so because of how prolonged it has been. The projected growth of the economy has, as a result, dropped.
A 1% slowdown in the GDP growth during time of election is something that over a period of time we have seen, and we hope that we are going to recover much quickly.
Last week, the Kenya Private Sector Alliance, KEPSA, indicated that the loss accruing from the 8th August election itself and the chaos that ensued stood at 700 billion shillings, which is 10% of the gross domestic product. The government says it cannot, however, confirm if this figure is an accurate picture of the situation. The state, which may be steering off any narrative that would dampen the already slowed down growth, is seeking to avoid further erosion of the economy's value. This is at a time when it has come to light that the country jumped 12 places in the World Bank Ease of Doing Business rating in the year 2016-2017.
Kenya has moved 12 places to improve from 92 position in the world last year to position number 80 today. Kenya today is effectively ranked as number 3 in sub-Sahara Africa.
With all these positive sentiments overlooking Kenya's economy, many a Mwananchi feels that there is a disconnect between these flowery accolades of growth and promise and the cost of living, which has been a difficult one for individuals and businesses.
So the impact you may not feel the shilling right away because all these salons have opened. But think about it if they are sustained another 5-10 years. You may see some of the impact right away right now, but some may come over time as competition increases.
As Kenya goes through another season of testing its famed resilience, it hopes that the growth in foreign direct investment does not slump after a 5-fold growth in the past 3 years.
3 years ago, we were just under $400 million of foreign direct investments into this country. Last year, I think that number nearly hit $2 billion.
Dan Mwangi, NTV Business.
Industry.
That conversation has brought in a lot of controversies, especially among the private sector players. Just looking towards how much exactly was lost in the economy. Of course, that is coming in on the back that Kenya moved up 12 places, which of course is good music, especially to the investors who are looking towards where to put their money. But I have the gentleman in studio. So let's start from Nderitu Mwangi. From your estimate, especially representing different business practitioners, how much was lost in the economy in the run-up towards the presidential election?
In my opinion, I think it could be more than 700 billion they're talking about. Yeah, I think we have gone through a lot, and the Kenyan business has not seen income trickling in for the last 60 days. That's a very long time. That's a very, very long time.
So more than 700 billion?
Yes.
That's your side?
Yeah.
Irungu, Nyakera, what's your guesstimate?
I think, like the CES said, we don't have an exact number. And it takes a bit of time for us to establish that. But the number, I believe, will be significant, given we are looking at the 60 days that Nderitu talked about, but also an additional, pretty much most of this year. Has been a politicking year, and which has affected business. For context, if you look at the last 4 months alone, the tax collectors lost about 50 billion. So broadly, if you look at it across the economy, then you can see it's a significant large number.
All right. Yeah. So you still staying with what the CS mentioned, of course, staying really safe because within government. Rufus, I know from your view how much was lost, and here I'll be very kind of safe with you, especially at the stock market in the run-up towards the presidential election.
Well, I like to say that, well, just to I think putting a figure right now is a bit too premature, but I like to think that the number could be significant. And I base that considering the survey which came out from CFC Stanbic, the PMI survey, and they say for the first time since they started the survey in 2014 that they've shown a lot of the rate of contraction has been the fastest. Since the survey started. And for the first time, they're saying the payroll numbers have gone down and new orders have also come down. So look at, and since basing on the fact that the survey covers, it's cross-sectoral, I think that can support that argument that the number could be, at $7 billion, even slightly higher than that.
Let's just go back to you. Of course, I know I have to break it down for a viewer. When you say the rate of contraction, what does that especially mean in the economical aspects onto it? Well,
it's in terms of output. So the demand has kind of dried out. most businesses are not seeing, new demand. And there's, I mean, just to cite the report, they said there's weak consumer demand, and there's no, enough money in circulation. So that has hit most businesses quite hard. So I think, and this is just a report covering the month of August alone. So we're waiting to see how October performed. So I think when I put all those factors together, I would like to believe that the number could be significantly higher, based on the fact that the whole political situation has dragged on for quite some time.
All right. So Rufus says it's going to be higher than the 700B, of course, on the back of the PMI report that's from Stanbic Bank. Last but not least, Kent, what's your guesstimate onto how much the economy, of course, has suffered in the run-up towards the elections?
Yeah, it goes without saying that there has been a net effect on the economy, but I wouldn't wish to speculate, because we're putting a mechanism in place at the chamber to get accurate assessment, since we are present in the 47 counties. So maybe in the next 8 weeks we may be able to give a more accurate, but there has been a loss. But whether it is 700 billion or below or higher, I wouldn't wish to be drawn into speculation.
All right, no one wants to really comment on staying safe. No one wants to touch that number. The two of you, was yesterday evening, just a few hours actually, we had that conversation, of course, going in and just kind of on the sidebar with my colleague Larry Mador. So the conversation has been, if it's 700 billion, how was that cost and how did we arrive to that figure? So take a listen, and then we're going to come back to the panel and let's see if they change their mind. Take a listen.
We arrived at 700. Yeah. How did you arrive at 700 billion? Over what period?
So we looked at about, it was about 4 to 6 months. And remember, KEPSA is an umbrella body. So we have all these associations under us, whether it's the Matatu guys, whether it's the manufacturing people, whether it's the wholesale and trade, whether it's the foreign investors. And so we've been having a conversation in, as a group and saying, okay, as we look at what the impact elections is happening, yes, we can see there's still appetite for investments. Only last month, September, we had about 100 investors from France coming into the country. So there's still such appetite. We still have seen some of the people going on and investing, but we knew something was not completely right, because with the, as we're saying, the way we have discussed and focused, and how the focus we have given to our politics in terms of our discussions and our narratives has an impact on how the business responds. Business responds to a very to a stable environment and political stability. So sometimes it's not the reality that there's the instability, but it's the creation of that instability in how we discuss it. So we started seeing, and I'll give you very few examples. The transport sector, you know, when there has been the protest and all that, they would hold back. You know, they're not moving. So we calculated that and said, what are you estimating as your losses per day? Then we looked at people like wholesale and retail. They're saying we're closing shop because there's protest and all that, or we're not getting all the goods we need from the manufacturers because they're not producing enough, because they're not sure we'll be able to sell in this period. So we start calculating around that. Okay. Then on the investors who had we had worked with on expansion or increasing the investments, we'd ask them, so have you moved? And they say, no, I'm holding this amount of money because I need I need to see how this period goes. So that's how our calculation came to about. And that's so we said, from that discussion and what we're getting from each of them, this is the estimate that we come up with.
Does that jive with what you're seeing at the institute?
Okay, first, you see, 700 billion is a lot of money. So if we lost 700 billion, we actually should all get together. So when this statement was made, one of the things we...
Let me qualify that. We didn't lose 700 billion.
Yes.
It's loss on what business could have been. There's the exact losses, but there's the losses of missed opportunities. The conferences that were not here, the Safari 7, you know, such missed opportunities, or investors who had said, I'm investing 100 million in September, and so I didn't do it. So that's where it comes from.
Yeah, certainly. But I mean, one of the things we need to, since you talked about context, let's talk about context. We track the economy on a quarterly basis based on data provided by the National Bureau of Statistics and the Central Bank. And from the third quarter of last year, Kenya's economy had already been going soft. In addition to that, we had the famines. You know, I mean, rather we had the drought, sorry. And then obviously the food problem. So those shocks. Then we had the interest rates control bill,
Yes.
which then meant that most banks did not lend at all, to small and medium-sized enterprises. Now, these were not necessarily because of the political season. These were already a weight that the economy was carrying, and already even our revenue sources, revenue sources for the Kenya Revenue Authority was already suffering from this.
Right.
So when you put all that together, one of the things that happens, or rather the way many people were interpreting it, was that business bodies are blaming one political coalition.
Exactly.
Okay.
No,
And by that, you're being partisan.
Yeah.
So what it was looking like, and which you ought to have been careful about, to be honest, what was looking like is you're hiding your political prejudices under fuzzy numbers and the fuzzy logic of this month. So obviously, in that way, it wasn't very prudent to make it in that way. But I'm not to advise you. The one thing we must contend with was we already had a very weak and soft economy. An extended period of uncertainty was going to aggravate it. And maybe that aggravation is what we are feeling. But already, there was quite a bit of tension. There was a lot of farms that had closed, not necessarily because of that. In addition to our traditional suffering. In this country, once we have rainfall, we are assured of 2.5 to 3% rainfall. That's not created by anyone, perhaps by God. So if those did not exist, then obviously we had the softness that was already happening. And perhaps this was hijacked, and you saw political operatives then coming out there and saying, and this is their point, NASA is costing us this amount.
Right.
That's one. Secondly, I think movements in the stock exchange have to be treated very differently because they are notional. In the sense that once they went up after the Supreme Court decision, for instance, did we give the Supreme Court credit for that? You see, because they are not necessarily somebody losing money off their pocket. So how we quantify them was also an issue. So are there losses? Certain. 700 billion over 4 months could be or not, but in my view, it's actually on the higher side. But the most important part was the messaging, so that you don't look like you're actually hiding your political prejudice, your political preferences under the numbers. And that's what most people do. And that's why that number has become very toxic for coalitions.
A heated discussion right there on a sidebar last night with my colleague Larry Mado. Gentlemen, your quick reaction. Kent, you're burning to say something.
Yeah, I think the thing that has come out is 25% of our GDP is drawn from agriculture. So that is one of the things which has been missed out in a lot of the discussion. We're talking about stock market and everything else, and forgetting the agriculture and the drought effect, which is something that already we could feel far before the politics. Then I think secondly, the issue of the banks, the interest capping, has had a significant effect in terms of lending and money available for business. So I think that I would wish to agree with Kwame that everybody, it's easy, it's a very tempting situation to say that it is the politics, but in my opinion, that's why we are saying we want to put in a place a much better aggregate for trying to assess economic performance. Because as I'm saying, if you look at the fundamentals, they're in place. If you look at all the statistics, they're in place. So how can there be such a grave contradiction? It means that it is not only the politics, but a lot of other things, especially the agricultural sector, is what I am very keen, and the chamber is very keen to look at. And you mentioned you'll be coming back to your statistics. Of course, in 8 weeks, we'll be coming and getting the Chamber of Commerce statistics and exactly how much was lost. Rufus, your quick reaction. And of course, Kwame, they're mentioning that indeed, kind of investment in the stock market is very notional and more speculative sort of view.
Well, first of all, like I said, I think it's too early to say on that figure. Okay, but just to say something, there's coming into this year, the country had a lot of baggage, and especially, as he mentioned, those the capping of the rates that has affected businesses, and I think you might know that credit growth has really been squeezed out. So I believe perhaps maybe in the fullness of time, when the correct quantifying is done, perhaps we might likely see that there are other factors that could have arrived to that figure even more. And case in point with the credit growth. Now, speaking on the sentiment on the stock market, I think going into this year, there was that vibe that you know, most investors will be sitting out because of the elections, and that has been the, you know, the normal cycle. But of course, you know, we had a good rally beginning February, and people are thinking, okay, is this a false rally? I mean, does it have legs to stand on? And I like to disagree with the fact that we like to say that most of fundamentals are in check, but I think there's some portions of the economy that are not in order. Case in point, with the, you know, the deficits in current account and the fiscal deficit. And I think even going forward, most investors are also very worried about you know, what happens. We know the agenda is still very expansionary in terms of infrastructure. So the impact on the fiscal side can squeeze out a lot of investors on the bond side. So those are the issues there. So as we speak right now, the issue is, are we going to see, so this is just a section of the market thinking that perhaps this rally might not have the enough impetus to keep on pushing it forward. But of course, yes, you have those who are still more bullish about the prospects of the market.
All right.
Yeah.
Irungu, Nyakera, break this tie, I should say, especially, and of course, what was mentioned there is that we've not had the government coming out strongly and just saying exactly this has been the impact. I don't know what you read, especially into that discussion that took place last night.
I think from our end, and I guess, as you know, Kenya Bureau of Statistics pretty much just looks at historical. We do not provide projections, but we do have KIPRA, Kenya, the policy research agency, which actually deals with more around economic projections. And as Rufus has mentioned, I think the fundamentals are there. They are strong. There are some that we've seen moving up and down, in particular in the last few months. We saw inflation was really going up, and to the point where it was almost at 12%, and that was on the back of the drought, and meaning that the food prices were becoming very high. But with the government intervention, we've seen, which ended anyway about a month or two ago, we've seen that inflation coming down to about 5.7%, which is within the central bank limits. I think when you look at the number, it's what we're also doing is we are looking at it in isolation, where we're just looking at the number, the indicators and things that have happened around that within the last 2-3 months. But a lot of the things have probably started happening a year ago or 6 months ago. One is patterns around elections, and we have seen time and time again, coming to an election, investors speculate and stop investing or slow down on investing. So it's not a surprise that that happened. It's just, the only issue this time is that it happened for a much longer period. Okay. When you are looking at the banking issue, we are looking at it as that it's only affected the bank, but again, it was a political issue, because as you know, this was more of a populist move back then from the 11th Parliament when they passed it, and when they took it to the president really didn't have a choice. And
you're actually sitting in government. I don't know, what are some of the maybe conversations around there in terms of, you know, expert opinion, even seek opinion from yourself, being an ex-banker,
no, true.
What's going to be the impact?
On one end, this bill was fairly radical in that it was actually limiting, capping interest, and also capping the deposits, the savings rates. Actually more coming up with a floor, so in a sense really squeezing the margins for the banks. But at the same time, the banks had not heeded calls from Mwangi to actually become a bit more flexible. Look at bring down the rates from the 20%, 22% to something more sustainable, actually even analyze credit and show that, yeah, there are some people who we trust. We are lending at 12%. So when you're being lent at 22, you can see that there is a differentiation. But now it was actually across the board very high. So I think it was good for just to bring a bit more moderation. How we go, where we go from here is of course for different stakeholders to engage. But I think in terms of the number itself, what I can say is certainly there's been a huge impact on the economy. Quite a bit of it anticipated, but a lot more in the last, or especially over the last 60 days, probably people are looking at getting back to it, but then they were hit with more of the electioneering, which brought pretty much a slowdown. If you look at the banking from the government side, also because of this slowdown, there's new contracts not being signed, no real activity, because as you know, towards 6 months to an election, also government slows down on contracting because of whatever new arrangements will come after an election. So again, when the government, which is the largest consumer, isn't as active in the market, then you'll see a significant slowdown, and that's what we've seen.
And Nderitu, you're a case study today, because when you see such headlines and you talk about the World Bank Ease of Doing Business report, does it kind of excite your ears, or no? Do you want to say, if say for instance you get a call from somebody sitting in Dubai and they're saying, Nderitu, so is this a good time to invest in Kenya, and you're actually investing in Kenya, what would you say?
I would say it's a very good time of investing in Kenya, because I know what happened during this electioneering period is slowly fading off, and it will fade off. So we are going to another place where still investing in Kenya is going to be a very good thing for international investors. The World Bank ranking for Kenya, I think a lot of work has been done by the government so that we can get into that place. I think when the current government came into place, they did a lot of things in regarding to licensing and all that, so that an investor coming into Kenya is very easy now to invest, as opposed to 5 years ago. I think it's a really good thing. I would like to touch on the interest capping.
Sure, go ahead. Yeah.
I think it was a very good move for Parliament to have thought that we need to bring down the interest rate paid by various customers for various banks, so that everybody can borrow and do business at a cheaper rate. But what came of it was not what was anticipated, because now the bank said, especially the people we are trying to promote through lower interest are the people down there. And these are the same people the bank said, okay, you want us to lend at 14%. These people are dangerous to lend to, they are risky, and so we are not going to lend. So they are very averse with risk, the banks. So in my opinion, I think it's better you get a little more expensive credit than no credit at all. Yeah, in business, I think we would rather get 2, 3, 4, 5% more and get the loan. Yeah, because the Mwananchi now is very hard for Mwananchi to get a loan from the bank.
Because
I think that needs to be relooked at.
I like that you just jumped back to the bank, because even on the parameters of the ease of doing business, part of the key issues on the access to credit.
Yes.
And from where you see it as an investor, you'd say, well, you'd rather get an expensive loan, but again, to the Mwananchi, the uptake has not been as expected. So I don't know if, say, as a large investor, you'd say, okay, well, perhaps it's not a good time to invest. So what happens to the Mwananchi? And maybe Kent, you can just jump in here, because you actually deal right in the counters.
Yeah, absolutely. I think the interest capping was a very well-intentioned action by the government, because even from the bank's point of view, they were holding very high non-performing loans, because yes, you can borrow expensive loans, but can you service them? That's the key thing. However, I think talking about that, we need to strengthen the role of regulators, and I think that's where these discussions need to go moving forward. Regulators that can justify how do you benchmark if the inflation is at a certain rate, the economic growth is at a certain rate, how do you benchmark and say this is what is sufficient in terms of interests? So the regulator's role there needs also to be much more put into scrutiny. But the other thing I would like to talk about is the issue of creatively expanding our economy, because we are relying on very traditional way and sectors. So some of them is more funding for startups is something that we as a chamber would wish to see done. More business incubation, and also the management of the public funds for youth, women enterprises. That is something that...
Do you want to include security there? I know you're very passionate about it.
I really feel that moving forward now, whatever action we as a country take must not be something that borders on insecurity. Because if we say we are going into prolonged protests, obviously you know that security agencies react, and in the process of reaction there is that fear and uncertainty. So I think what we need now is to consolidate, come to some fundamentals, put some discussions in place, but let us not once again give the uncertainty due to insecurity. So security is a fundamental that everybody should look at.
All right. Thank you very much, Kent. To our viewers, of course, you can reach out to us through the numbers on your screen if you have questions to our panel. It's not always that you have a PS, an economist, and, of course, a business practitioner right in studio. So feel free to dial in. The numbers are on your screen. Or reach out to us. Our Twitter handle is at NTV Kenya, at AM Live NTV, at Laban Cliff, and we'll be able to sample your questions to our guest. But really quickly, before I bring in Rufus, I did this story about politics and business, just looking towards what exactly has been the impact. Of course, people had touched particularly on the stock market. So we're going to move in from the stock market going into infrastructure and then tourism. But first, let's take a listen to this piece where we interviewed Nderitu Mwai, who's the head of corporate affairs at the NSC, and here's what she had to say. A day after Kenyans went back to the poll for presidential re-election, we tracked the performance at the Nairobi Securities Exchange to just see what's really the impact of politics on business. We're right here at the Nairobi Securities Exchange trading floor, and what you see before you is a board just showing the analysis of how the stock market performed earlier today. Now, the counters listed in green show a percentage change in price. Of course, actually a change in price, gaining prices, that is in green. And of course, what you see in orange just before you on your screens just shows that those share prices did not witness a change in price, that is today. So those counters were not traded on today, and those in red actually show that this counters actually had a reduction in share prices, that is compared to the previous trading session, and of course that was just before the presidential re-election. So looking at these numbers and just looking at the different counters, of course listed here, different counters listed on the NSC, we posed a question to the analysts who are of course watching these numbers and are kind of making sense of the numbers. We spoke to one of them, that's Nderitu Mwai, on what is really the impact of politics on business, and particularly on these share prices, and this is what she had to say.
It's been a difficult year, but we've seen investors taking a wait-and-see approach, especially the foreign investors. Today we closed the market, the NSE closed at 36.48 points, which is it's quite resilient given the turbulence of the political environment, all these announcements, and the political uncertainty had, and it was prolonged. You know, we thought we'd be out of this by August, but it's been now 3 months after, and we're still in election mode. We are very hopeful that once we close the political uncertainty, the market will go back to bearish movement. What we need to sort of inform the investors is that the fundamentals of these companies are strong. It's just the environment that we are in right now that is making people take they're taking positions based on their emotions, should I say, given the political environment. So I would urge investors to buy. It's actually a buyer's market right now. Some of the counters are at their lowest or are very low. Some are actually at their lowest. So it's a good time to come in. You're coming in low, and we are very certain and hopeful that it will pick up, and some of those counters will go back to their fair value.
All right. It's a buyer's market. Rufus, do you agree?
Well, I agree. And like I'd said earlier, I think the prices are very cheap. So I think from that perspective alone, it makes it a buyer's market. However, I'd like to disagree with the fact that when she talked about the fundamentals of the company, and I disagree on the point that looking back, say, beginning 2014 to date, or let's just say until the end of last year, we've had no less than a dozen companies announcing profit warnings. Okay, and it has happened at least for every year, and I think it's on record. Beginning 2014, we had about 8 companies. The following year, had about 12 companies, and all of them, you see a common thread of squeezed earnings, soft revenues, and a lot of layoffs, and especially within the banking sector and the manufacturing sector. So I think there's something about fundamentals that that is a bit not really right. However, I like to think perhaps maybe this is just a temporary situation. Yes, business conditions has been a bit tight in the last 4 years. Okay, I like to say in the last, for this, since this regime, without sounding any political, I think since the coming of this current regime, it's not been very positive for the market. I think the growth rate has been about 1.5% on average, and compared to the last 10 years of the previous regime. So I think we want to think that perhaps maybe it's the specific conditions, like, say, for example, the capping of rates that has kind of stifled a lot of businesses, even impacting even some of the listed companies. I think maybe going forward, with the talk that perhaps we might see a repeal, maybe that might change, the performance of some of the companies that we're talking about. But now, speaking about the market again, I think if you take a long-term view, then it's a good bet. But if it's a short-term speculative kind of thing, then perhaps things can go either way. Yeah. All right.
I'm happy that you're mentioning it now before the markets open. So maybe somebody sitting at home with their money, they might choose where to go. Irungu, I want to bring you right now in is because the government also has investment, especially in different stock counters, through especially the NSSF. So from where you sit and listening to Rufus and, of course, Obalera speak, does this in any way, of course, change tact into, the shares held by government in different counters?
Actually, I think just from what Rufus spoke on, I think I agree with the NSC in terms of the fundamentals of the companies. A lot of these companies, for example, you take an example of Britam as a company, still one of the largest insurance companies. IFC just bought a stake just a while ago, but the share price has gone down significantly. Yeah. So is Britam a risky company? No, fundamentally, the companies are strong, and actually a lot of their companies remain strong. There are some that we've seen going down significantly, but also has been on the back of various shocks within the economy that affected them in a big way, or where there's on the reasons of the economic slowdown over the last few months. But I will say that the East African and Kenyan companies remain to be much more of the stars performers, even within Africa. And talking of the government involvement in certain counters, as you know, NSF is involved, as you mentioned, in a big way. But then that's not government, because that's Mwananchi money, pension money. Government has stakes in companies such as your Kengen, KPLC, and the others, Safaricom, and these are more of long-term investments. So really, it doesn't take a view based on the movement on the stock exchange.
All right. So it's still very long-term and putting at it. So let me ask Kent on Nderitu. You, of course, would say perhaps whether to buy or sell shares. Let's start with Nderitu. At this point in time, would you buy or sell?
As it has been well said, it is a buyer's market right now because the stocks are at their low level, and I think that's why you are seeing international investors, since I think they have more power to risk, and that's why they are buying. I think anybody who has their money now can buy because it's a buyer's market.
Returns, perhaps. I mean, if, say, for instance, you want to say, and here I'm just looking at you, the case study, if you say you're going to invest your money right now in the stock exchange, after how long would you expect to get your return?
As I had said earlier, this is a very resilient economy. After we are through with this electioneering, I'm sure as soon as we are through, the stocks are going to start going up. So it depends at what level and which stock you bought.
Right.
Yeah, so that you can decide to sell or buy.
Kent, from your side, what are you gonna? Where are you investing in?
I would say this is the right time to buy, because just once the economy regains its footing, you will find that a lot of these companies will be they will perform. Secondly, one of the indicators is that we've not had significant capital flight, which is an indicator that most of the major investors are convinced. If anything, we are having foreign investors coming in and buying the shares, which means that they have looked at the fundamentals once again and they're in place.
Thank you very much. Away from the stock market, let's talk about enablers. And just looking towards the enablers of the economy, we're talking about matters infrastructure. Just yesterday, we had, of course, the launch of the inter-county train that's from Nairobi, and of course, making stopovers to Athi River in Mali and a few stops as you head towards Mombasa. Of course, that has increased transport time along the SGR. This is coming in 5 months after, of course, the government launched the standard gauge railway line. So, of course, there are concerns about, fraud and cases of just vandalism across the rail, and also issues especially to do with the ticketing service and what have you. So I began by asking the Transport Cabinet Secretary, that was yesterday, about what exactly and what is the intention of launching the inter-county service, and this is what he had to say.
One of the key objectives for bringing the SGR was connectivity. Yes, we connected Mombasa to Nairobi. But in terms of Mwananchi in the 7 counties in between, they may say we have connected Nairobi to Mombasa, but we haven't connected themselves.
So there are lots of works that have taken place right here. We're standing in at the Nairobi terminus, that's right at the station. What should Kenyans expect? I know there's a cargo train coming up, and of course, again, there are challenges that you're dealing with, particularly also to do with vandalism.
Well, I think one of the things which Kenyans should know is that when they estimate the cost of a project, they're just looking at the rail, the truck by itself. But there's a lot of supporting infrastructure, like the stations, for example. These are mini airports, like you can see, which have to be done with high security investment. Even more important is what we call the inland container depot, which we are actually doing, and it will be completed. It will be ready for use in the next 1 month.
So it's about 5 months when, of course, the president was here to launch the standard gauge railway line. Have you done a cost-benefit analysis? Just look at what's the value of the train vis-a-vis other means of transportation.
I think that one of the benefits is very obvious. The kind of queues we have had, people queuing to get in the train. I think that clearly demonstrates to Kenyans that the benefit has been very, very evident. One other benefit is, like I mentioned, the beds in Mombasa. Even with the global tourism problems, in Mombasa we used to have 50% occupancy in good times. Now, even in bad times, that has gone up to 80%, meaning there are jobs in Mombasa for our people, in the tourism sector, and even the cost of actually moving people around. Kenyans who never afforded a holiday because they couldn't afford to go overseas, go into the SGR, and they go to Mombasa.
You paint a very positive picture in light of just coming in from a presidential re-election.
Yes, as I said, we didn't do it because of elections. We could have said what I'm saying now before elections, so that we could get the votes. But what we said before elections is exactly what we are saying now, because this project was done for posterity, whether or not there'll be elections.
All right. I'm not sure the CS kind of gave a complete overview on the cost-benefit analysis of the standard gauge railway project vis-a-vis other means of transport. But, well, the man who's in charge of planning and statistics is here. So, Irungu, and of course, you were at that docket, especially when that conversation was going around infrastructure. What has really been the benefit of SGR so far?
I think as One is for us to know that the SGR is actually one of the flagship projects and anticipated even under the Vision 2030. And the fact that we've only done the Mombasa to Nairobi, it just shows that we're only halfway through. We still have to do then Nairobi to Naivasha, and Nairobi to Naivasha to Kisumu, and Kisumu all the way to the border point, and then connects to the hinterland, to the regional countries of Uganda. The benefits of the SGR, I think we're not really looking at it on the, from the passenger side alone. The passenger will be minimal, as you know, from the way trains operate. In many cases, actually, the passenger are subsidized by the commercial. So we expect that in December is when the commercials will start, cargo transport will start. And the benefits for it, one is the 60% reduction in the cost of transporting cargo from Mombasa to Nairobi. Two, of course, you're talking about the fact that on the roads, we'll be removing quite a number of trucks from the roads. So the congestion that has been coming. Also the maintenance that has been coming. We've been spending billions on maintenance of the roads because of this kind of trucks. The accidents that we have on the roads. And then just the time that it takes. It takes about 6 hours for the commercial train to come from Mombasa to Nairobi, over the current 16 to 18 hours that it takes a truck. So the benefits around the SGR go over and above the specific economic revenue return that someone looks at. It's actually on the commercial and economic realization that is brought about by all these changes. If you just look at the Naivasha route and the fact that they are looking at putting an industrial zone, the economic zones in Naivasha, what that happens is we bring down the cost of transport significantly. Currently, transport is about 34% of the goods on the shelf, meaning that if we can bring this down to the level of about 14% through a more efficient transport mechanism, and which SGR becomes a key part of, then you'll see that even our manufacturing will become more relevant. You'll see that the export will start being able to actually produce and export goods because we brought down that cost. So I think the SGR, it's in early days. As you know, it's still in the testing phase. That's why they're only doing the passenger. But the benefits that will accrue to the economy at the end of it, I think will be very significant.
Of course, there was a big function yesterday, and Atanas Minor, who's the managing director of Kenya Railways, has pegged the number at about $500 on average, transport cargo from Mombasa to Nairobi, maybe perhaps kind of halving what other transporters would spend on the road, because they'll estimate it at about 100,000 shillings. 100,000 shillings per cargo. That's a per 20-foot container cargo. So, but it's easier said than done, I should say, because they're saying right now they're still in the testing stage and what have you. But Kent, you're previously chairman of ICDC, and I don't know if some of these fundamentals, or shall I say investment in infrastructure, are seen from the business community.
Yeah, absolutely. I think that the SGR is one of the very obvious infrastructural projects that has long-term benefits. In terms of opening up the hinterland, that's one thing. In terms of stimulating economic development in certain other sectors of the country, it would be our wish that the government would look at, for example, the unclaimed assets which are lying somewhere, and through the authority, borrow from that for the next phase. In fact, if you look at an area like Eldoret all the way to Malaba, that would benefit from another SGR, because that is where you get a lot of the food which needs to be brought up to Nairobi, which is the major markets. And secondly, you can also create new centers, commerce centers along the SGR. So it is a good stimulus. It's not just only looking at it and saying Nairobi to Mombasa it is what happens along the line of rail. What they call in Southern Africa, they call it the line of rail. You find that's where you have most economic development.
Okay, going in. And Nderitu, I want to speak to you really quickly because as director of Redberry, and of course you're dealing a lot in digital signage and what have you, and just looking towards the opportunities across the counties. If you see such an inter-county train and making all the stopovers, meaning that there will be human traffic across on all these stops, does it spell any business opportunity, and what are some of the sectors you'll be looking towards cashing in?
It is, of course, spells a lot of opportunities. First, I think what the gentleman didn't say is that the SGR has really opened up Mombasa. People are able to travel to Mombasa easily, and the bed occupancy in Mombasa hotels has really gone up due to domestic tourism, because it's only 700 shillings for anybody can get to Mombasa and back. So that's another opportunity that has been brought by SGR. But in those centers, even as the cabinet secretary said yesterday or the day before, those are coming out like economic centers, commercial centers. Wherever SGR stops, there are opportunities. There's opportunity for transport. There's opportunity for restaurants because people need to eat. People need to be transported home from there. Cargo needs to be transported from there to interior. So there are many opportunities that come up as a result of that. Yeah.
So particularly looking towards tourism as your number one sector for growth across board. I'm looking towards, of course, issues to do with what every Kenyan would say, oh, now that the counties, we have the inter-county train, perhaps we should be buying land nearing their stations, or shall I say in Emali, or shall I say perhaps in Athi River, because of the opportunities that this has portend. I don't know, Rufus, from where you sit. Is it something that, you know, kind of tickles the fancy of investors?
I think going by the Kenyan psyche when it comes to land issues, I think that's automatic, that you're likely to see a lot of purchases around areas where there are line of rails, as he puts it. But just to say something else, I for example, myself, I come from Taita Taveta County, and I think in the last 6 months, I've never traveled, going back home as much as I've done this year since the SGR came online. So I think the frequency of travel really opens up. And I've had chats with the guys investing in the tourism sector in the county, and they're saying that there's talk of SGR tours. So as you say, the tourism sector has really been opened up. And just to add on to what Mr. Nderitu said also, you're seeing a lot, even the numbers of bed occupancy going up, even just in the county itself. So I think there's a lot of benefits, long-term benefits are plenty. Now, I think there's a number, just to comment and connect with the ease of doing business report. And one of the factors they touched on was the interconnectivity. And I think that was the key issue there. Seeing all these investments that are being made, I think these are laudable efforts. The investments in infrastructure and transport. I think the figure they gave there is for every 1% increase in investment in infrastructure, this is 1% increase in the GDP. So I think long term there's benefits. I think for us to really focus on just on the cost alone is just being one-dimensional, where there's so many factors to look at.
All right. Three things. One is that we need to stem down the waste. We lose more to waste than sometimes even corruption. Number two, we need to tone down our political rhetorics and focus more on economics. Let that be the driving force behind the country. And number three, which is very significant, is that Moody's had on 2nd of October put Kenya on the watch list because of uncertainties and fiscal deficits. So those are things which we need as a country and as patriots to all come together and try and stabilize this country, because if our credit rating goes down, the cost of borrowing goes high and everybody is affected.
Thank you very much. Thank you so much, gentlemen. Apologies to really rush it towards the end there. Of course, the interesting conversation, and we really want to continue on to this regarding how do each other way forward as, of course, a business community. Starting from far left, Nderitu Mwangi, thank you very much, as CEO of Redberry Group, representing also Hood Group. Next to him, of course, PS in charge of planning and statistics. That's Irungu Nyakera. Thank you very much for your time. Rufus Mwanyasi, MD, Canon Capital. Thank you very much. And Kent Lisibo from the Kenya National Chamber of Commerce and Industry. Interesting discussion out there, of course. Keeping more details on your copy of the Biz Daily and a lot more, especially in our subsequent bulletins. My name is Laban Cliff Onserio. This has been In the Market.